Hello, Mike Swanson, Wall Street Window here. Wow, the past couple trading sessions that ended last week, we saw a big tumble in gold and silver. Actually, earlier in the week, silver had the biggest one-day update in its history, and a point basis and even a percentage basis happened with gold. But then Friday, silver fell just about 30%. The selling was so intense in the SLV ETF that it actually diverged away a little bit from its net asset value by the end of the day, which is pretty wild. To start the week, SLV was one of the top traded positions on various brokerage platforms when it came to American traders, and the same thing happened on Friday. So while Americans had been ignoring the move up basically last year, this year they are starting to trade these ETFs. They're not starting to trade mining stocks yet. I'll talk about that more in a follow-up video. But right now we have to address the big question. How do you time a metals bottom in a correction? And then what is likely to happen next? And I got to show you the charts to answer that. This is what's going out this morning in my free newsletter. You can get it from WallStreetWindow.com. Just go there to subscribe. But I've got a long-term chart here of the price of silver. And what I want you to notice is the obvious. It went straight up. A parabolic move took place not simply the past couple of weeks, but it really started last June or late May. Well, I think it was June. Anyway, when it broke through the 52-week high of 2024, it rallied up to 50 by September, and the momentum just built. But you get price volatility. That means how big something moves one way or the other. And what I have on the chart, the pink lines surrounding the price are the 200-day Bollinger Bands, and they measure volatility on an average 200-day basis. So it's a long-term volatility chart. The bands narrow when that volatility contracts, which typically is what happens, or it is what happens after a long period of price consolidation. And then when the bands start to expand, you typically get a good intermediate term move in the market or stock you're looking at. And on the bottom of the chart is the width indicator for these bands. 2024, the bands had contracted so much with silver and many other metals, such as the palladium, platinum, that they contracted to, especially the latter two, they contracted to levels not seen in years, suggesting that when the bands would expand, which they ultimately did, we would get momentous moves, and the momentous move indeed happened. And this is why in 2024, I was doing videos pounding this in before silver broke through $26 an ounce. The breakout happened, but now look at the bands. Now the bands are wider than they had been in decades. This chart here goes back to 2001, and the bands now are wider than they'd ever been on this chart. So it has been a historic, a momentous move, and at some point you get what we got at the end of last week, a counter move, a correction. Corrections happen in all bull markets. In the US stock market, typically you get a 10% correction every single year, and sometimes more. We got one last year in April, and the corrections typically are associated with news items, but they do tend to happen. And here we are in the metals market. So to me, if we look back at history, you can see other periods of time when these Bollinger Bands, the width indicator you're looking at, got above 75. Happened in 2020. It happened in 2011. It happened in 2009, but that one was different because that one came after a price decline, and the width of the of that suggested that was a crash bottom, an extreme selling move. And then you got 2006, 2004. So, and again, we're looking back at 25 years of price history, and we'll talk about gold in a second. But the logical thing to expect, in my view, is that these bands are going to come a little bit together. They're not going to get down to where they were below 50, but they will come a little bit together over the course of the rest of this year. That is another way of saying that we're likely to see a consolidation period in the price, sideways price action to digest all the gains and to stabilize this sell-off that has happened last week. That doesn't mean the price can't go a little bit lower. I'm doing this video Sunday. It also doesn't mean the price can't gap up and go up from here. I'm going to talk about timing the bottom in a moment, but I just wanted to talk about what is coming, what is likely to happen here, a period of consolidation. The one in 2004 that happened after that spike, it lasted 2 years for silver. It didn't last that long for gold. 2006, it lasted a year and a half. And the one that ended in 2024, that was really almost a 4-year consolidation. That's why I was so excited about it. And it happened with palladium and platinum. Gold didn't consolidate for quite as long, but it was over 2 years. And such long periods of consolidation lead to momentous historic moves in the setup was so wonderful. And let's talk about gold. So you can see, a similar thing. Gold too has had a momentous rally since 2024. Really, neither one had a big correction. We saw periods of consolidation. We'll focus on them in a second, but the Bollinger Band width on gold, not at a level not seen before. The one in 2008 was greater. The one in 2006 is about equal to where we are now. What happened then? Again, a year and a half of price consolidation. Prices stabilized. They went into a trading range. Does that mean it's going to go sideways a year and a half, trade around 5,000, a little bit higher than that, in a low here or 4,600 or something, a sideways range for a year and a half? It could. That could be what ends up happening. Doesn't necessarily have to happen, because we also saw, this is looking at last year, shorter periods of consolidation. The one that took place in October lasted about 8 weeks. The one that took place in April, it lasted to Labor Day, basically, and right on the start of September, gold gapped up, smashed through the April high after 1, 2, 3, 4, 5 months consolidation. So we could get 5 months consolidation. It doesn't have to be a year and a half, but some sort of consolidation is the most likely scenario here. We got support basically on the low of Friday for gold and silver, and the next support level is the 50-day moving average for gold, 44.57. Here, let's look at silver. The 50-day moving average, the blue line, is at $73.63. Doesn't have to go there, but it could go there. That would not be a reason to panic. And here you can see the last 2 consolidation periods for silver that took place last year. The one in April was shorter than the one that took place for gold. Silver broke out in June. Gold broke out the first trading day of September. And even the October, November, December consolidation was a little bit shorter too. Silver just got into a much more powerful bull move after the April correction that took place in both. And silver, it fell just about 20% in April, on that dip. Gold didn't fall that much, but silver did fall. Silver's more, volatile than gold, as you saw last year. So how do you time the bottom? How do you figure out if you want to try to, play a price low? You watch the GDX to gold ratio. This is the most reliable buy sell indicator I know for the metals market. The GDX is the mining stock ETF. Yes, I own a position in it. Yes, I own GLD. I have a position in GLD. I own silver ETFs too, all sorts of metals ETFs. But GDX is the mining stock ETF. If you divide the price of GDX by gold, you get a ratio, a price ratio chart, which is what you see here. What this chart essentially measures is how GDX is performing relative to gold. Typically in a up leg, in a bull market, this ratio goes up. The mining stocks go up more than gold. But then when the mining stocks start to lag the price of gold, that's a warning sign that, hey, look, this rally is probably going to lose momentum. There is likely to be a dip or correction. This warning sign happened in October. That's why I got the line at the trend line pointing down. It happened in October ahead of a temporary high in gold and silver. 2 weeks, this ratio topped out, peaked out before gold and silver did. This time, the same thing happened. Not 2 weeks, but a couple trading sessions before. And then what happens is when the correction begins, this ratio tends to go down. The mining stocks trade down harder than gold at first, but then the ratio stabilizes. The mining stocks start to actually outperform gold. They start to either don't fall as much on a percentage basis during a day when gold and silver are down, or even go up. They can go up when gold and silver are down. And that's either way, you get a signal from this ratio that, look, us mining stock, we forecast a peak in the metals, and now we are forecasting an end of the correction on a price basis. And doesn't mean it's the ultimate bottom, but it means there's very limited downside when we see this ratio turn up. Now, obviously, didn't do that on Friday, a big red bar down, but it could do it at any moment now. So this ratio is what I am now watching to signal a price low for either a bottom or a very imminent bottom in the metals market and mining stocks. So watch this. I'm watching this. Go to stockcharts.com, and if you type in GDX divided by gold, it will come up. And here is a 60-minute chart of the ratio, which actually shows that there's a little bit of attempt to stabilize in the ratio the last couple hours on Friday, which is a positive sign, a potential positive sign for this week. So I want to see how this all plays out as we trade Monday and how this does this week. Again, if you want this, if you want to be updated on how the ratio trades, you got to subscribe to my newsletter, WallStreetWindow.com, because I will send out emails with the chart when I see it. Give the signal we're looking for. Like this video, so I'll do more of them. Leave your comments. Tell me what you think about gold and silver. Where do you think the bottom is at? What do you think the metals will do for the rest of this year? I have seen a couple crypto Bitcoin gurus tell people sell silver, sell gold, buy crypto. I think they're crazy. I think Bitcoin is garbage. What do you think, though, yourself? Let us know. And subscribe to this YouTube channel, and I'll be talking with you later.